Stablecoins are quickly becoming one of the most important innovations in digital finance. While cryptocurrencies like Bitcoin and Ethereum are known for their volatility, stablecoins are designed to do exactly what their name suggests: remain stable. They are pegged to assets such as the US dollar, the euro, or even gold, which means their value doesn't swing wildly up and down. This stability makes them an attractive option for everyday transactions and safer online purchases. But how exactly can stablecoins be used for safer purchases? And why should consumers and businesses consider them? That's what we're going to explore today. Let's begin with a simple example. Imagine you're shopping online and want to buy a product worth $50. If you're using Bitcoin, the value of your payment could change significantly within minutes, either making your purchase more expensive or giving the seller less than they expected. This creates risk and uncertainty. With stablecoins, on the other hand, 50 digital dollars equal 50 real-world dollars, no matter when the transaction is processed. This eliminates price fluctuation risk and gives both buyers and sellers peace of mind. One of the biggest advantages of stablecoins for safer purchases is transaction speed. Traditional international bank transfers can take days, especially if they involve multiple banks or countries. Stablecoin transactions settle in minutes, sometimes even seconds, and are available 24/7. This means you don't have to wait for banking hours or weekends to complete your payment. Faster transactions also reduce the risk of delays, chargebacks, or fraud that can occur during long settlement processes. Another key benefit is security. Stablecoins run on blockchain technology, which uses advanced cryptographic methods to secure transactions. Every payment is recorded on an immutable ledger that cannot be easily tampered with. This transparency reduces the risk of fraud and gives both buyers and sellers confidence in the payment system. Unlike credit cards, where personal information can be stolen and misused, stablecoin transactions don't require you to hand over sensitive details. Instead, you send funds directly from your digital wallet to the seller's wallet, cutting out intermediaries and reducing the chances of identity theft. Stablecoins also offer an additional layer of safety when it comes to international purchases. For many people around the world, sending money across borders can be expensive and risky. Exchange rate fluctuations, hidden fees, and long processing times make cross-border transactions frustrating. Stablecoins solve this problem by keeping the value consistent and moving funds directly between wallets. For instance, someone in Europe can send US dollar stablecoins to a seller in Asia instantly, without paying high conversion or transfer fees. This makes stablecoins not only safer, but also more cost-effective for global e-commerce. Another point worth noting is financial inclusion. Millions of people worldwide do not have access to traditional banking systems, either due to geography, lack of infrastructure, or restrictive regulations. However, many of these people do have access to smartphones. With just an internet connection and a digital wallet, anyone can receive or make payments in stablecoins. This opens up safer purchasing opportunities to individuals who would otherwise be excluded from the global economy. Now let's talk about consumer protection. In traditional online purchases, chargebacks can sometimes lead to disputes or abuse. Sellers often face risks when buyers file false claims. With stablecoins, transactions are final and cannot be reversed once confirmed, which protects sellers. At the same time, escrow services built on blockchain can protect buyers by holding funds until the seller delivers the product or service. This creates a fair balance of safety for both sides. Businesses are also starting to embrace stablecoins for safer purchases. Payment processors and online platforms are integrating them as a method of payment. By accepting stablecoins, businesses can avoid credit card fees, lower fraud risk, and expand their customer base to a global audience. For consumers, This means more opportunities to use stablecoins in everyday life, whether for online shopping, subscriptions, or even in-store payments. Of course, no system is perfect. Using stablecoins for safer purchases still comes with certain challenges. Regulatory uncertainty is one of them. Governments around the world are still figuring out how to treat stablecoins. Some worry about their impact on monetary policy, while others are concerned about financial crimes. As regulations become clearer, the adoption of stablecoins for everyday purchases is likely to grow stronger. Another concern is trust in the issuers. A stablecoin is only as safe as the reserve backing it. That's why it's important for consumers to use well-audited, transparent stablecoins that are properly collateralized. Despite these challenges, the future of stablecoins in safe purchasing looks bright. Central banks themselves are exploring digital currencies, known as CBDCs, which share many similarities with stablecoins. This signals a major shift in how we might conduct purchases in the future. Whether you're buying something online, sending money abroad, or simply looking for a safer way to pay, stablecoins could become an everyday tool for millions of people. In summary, stablecoins combine the best of both worlds: the speed and security of cryptocurrency with the stability of traditional money. They eliminate volatility, provide faster and safer transactions, reduce fraud risks, cut costs, and open up purchasing opportunities to people everywhere. For consumers, they mean safer purchases. For businesses, they mean lower risks and more customers. And for the global economy, they represent the next step in financial evolution. So the next time you hear about stablecoins, don't think of them as just another digital asset. Think of them as a practical, safe, and efficient way to make purchases in an increasingly digital world.